Look at what investors are doing with their money in this space. Welcome back, Mark Sherwood from iPartners. Mark, welcome. Look, are alternatives, really getting the same attention that they were getting as we were sort of, at the height of the pandemic? Yields were extremely low. Has anything sort of shifted in the landscape over the past few months now that we've got sort of central banks moving closer to liftoff?
Yeah, hi Nadine and hi David, nice to speak to you again. In answer to that question, no, there is a lot going on in the alternatives sector, particularly in capital raisings for some growing private businesses, some that are requiring further debt capital, some that are requiring further equity capital, really depending on their business and their business needs. Our current activity is tending to be with businesses that we've already supported through their earlier stages of growth. They're continuing to need further debt funding because their business continues to grow fast and grow well. This has particularly been prevalent in the fintech sector, but it has also been occurring in other sectors as well, even such as within the agricultural sector, where there's been quite a lot of recent activity as well.
Can we go down that path? Agtech is a really hot space at the moment. What kind of deals are you seeing at the moment out there?
Yeah, in ag, we've been very active. We've been involved in some farming aggregation type strategies. We're also currently raising further debt capital for a business that provides lending in the cattle and the livestock sector, which therefore supports farmers as well. The business that we're working with right now, Otley Capital, has been one which we've been able to support from their commencement, and they've been playing quite a pivotal role in that livestock sector, providing efficient capital for livestock agents that do the buying and selling of the food that we eat. So that has been quite a satisfying to support a growing private business, and of course supporting that farming sector as well.
So there's lots of demand coming from businesses that are growing and are seeking capital. What is demand like from investors? Because of course the returns on offer can often be, really appealing.
Yeah, in terms of the alternative sector and the demand for investors, we're definitely seeing private investors becoming more sophisticated around their knowledge of the range of alternative assets that are becoming available, and really looking at alternatives as a way of adding diversification to their investor portfolios. We've been spending a lot of time trying to help this process through education pieces and presentations that assist those investors. It's fair to say that the largest institutional and global investors tend to already have much higher weightings towards alternatives than what we have traditionally seen from private investors. Probably the best example of this could be to look at the Future Fund, who openly publish their returns and make their asset allocations public, and who of course have had very strong returns over the last 10 years particularly. Their most recent update shows over a 30% weighting towards alternatives and private equity combined. And if you take that asset allocation analysis one step further, property and infrastructure type assets total around 14% in their portfolio. So that is on top of that 30% weighting that I just mentioned in alternatives and private equity. So it really shows how the institutional world has been taking very large weightings towards alternatives for quite a long time, and this is really starting to feed through to the private investor as well.
Mark, just humour me for a moment. So we're seeing volatility in public markets start to pick up, whether it's rates, world, FX, and even a little bit in equities now. What does that mean for private markets? Is it going to encourage people to go in there and just seek the safety, or do you start to see people get a bit nervous about what's going on in the space?
Yes, David, I think it's fair to say that private investors have realised that just because an investment exposure may be unlisted, as in not listed on a stock exchange, it doesn't necessarily mean it has to have a higher level of risk. Private investors are very interested in seeing differentiated opportunities that potentially add an exposure for them that they don't currently have. And in many cases, a slight illiquidity premium might be able to be negotiated into the return of the asset, making the investment highly viable and the reward for the level of risk being highly appropriate. And that's the exact type of asset that we seek. So that is all coming across to the private investor, and I think that's why we're seeing the consistency of interest in the sector.
Mark, thank you for the update. We do appreciate it, and we look forward to speaking again.
My pleasure. Thanks, guys.